Good evening, traders. Hope everyone is doing great tonight. Had a great start to their new year. We have been kind of out of commission for the last week and a half, I would say. We started off the year, we reamped our strategy a little bit, and the first week, nothing really started clicking, and it looked like we were just had the wrong outlook at the time. We were focusing too much on the wrong things. So I think we took 5 losses in a row before we decided to take another look at how we're approaching the markets and see if we could pinpoint kind of where the timing issue is, which was the issue with most of our trades. So we feel confident that we've kind of rectified that problem. What we were doing is we were putting a little bit too much weight on political action and seeing that as more of a direct correlation to the market, as it has shown it really isn't. I mean, the government's still closed, the trade deal is still closed, but yet we are still in the midst of this bear rally, so we need to readjust our sights a little bit. And this week was fantastic for us. We didn't really publish our trades in the meantime because we were making sure that our strategy was good and we didn't have holes in it like we kind of started the year off of. So we were actually 8 for 9 this week, which was fantastic. Actually, all calls too. The VIX dropped below 20, which is one of our kind of hard indicators that what our bias is going to be towards the market. And we picked up some calls on McDonald's, the Russell 2000, QQQ 3 different times, SPY, SPY 3 different times, JPM, and then we have Boeing. So that's 10 trades. So 9 out of 10 were profitable. We took a loss on some of the QQQ calls that didn't come through early in the week. But we think that our focus is realigned with how the markets are reacting. So we're going to keep doing what we're doing now and giving you guys the information ahead of time to see if it helps you in any way. As always, run it through your risk parameters, make sure it makes sense to you. These are only ideas. These, as you can see from our first week of the year, they are always good ones. So moving on, we expect a lot more better things to come this year. So let's jump right into it. Great week overall for the markets, up about 3% across the board. The year-to-dates are, they're kind of misleading in our eyes. They are up 6-7%, but the year ended almost right at the bottom. So they're up 6%, but yet we're still in the confines of a bear rally in almost all the indexes. We might be breaking the lower support that turned resistance in some of them this week, like in the Dow, I believe, but we'll get into that. So bear rally still in effect. We're going to go with the trend for now. Looking at the Dow, yeah, see, broke below this support, which turned resistance, and not even much of a battle there. Volume's upticking a little bit, which is, arguably there's some more upside. I mean, it's still a bear rally until it can validate this 260 level. So something we're keeping an eye on. SPY. Now this is just broke above its lower November support. That's turned resistance. So this has a little bit more to go. We'll be looking at some calls on this side. If we have a continuation that's going on Monday, we're watching that 270 level pretty closely as well when we get down to the hourly. QQQ, same story. This one has a little bit more legs than SPY. It's gotten above its Novembers, so it's about mid-range right now. So, arguably you have another $7 before we really need a battle to happen to keep this bear market intact, and that's what we're watching out for. Potential outcomes. We think we'll see a bit of a continuation to the upside on Monday. Most of them are either just broken the lower end of the range or in the middle of the range, so there's still some upside without too much resistance before the bears really have to get down and attack those levels to keep the trend in play. Less likely, our government's still shut down at this point, so the trade deal closes and the government reopens. If both those happen this week, hey, the markets could rally through that. I know there's been talks on lowering tariffs during negotiations, which the markets seem to have rallied to. But in our eyes, that means that the trade war is going, the negotiations are going to last longer, which we think is overall, we have some downside. We get most of our products and manufacturing done by the Chinese, and if our administration pisses them off too much, they could bring it down on our market just like we've done to theirs. VIX, like I was saying below, we broke below that 20. Still has some legs. It's still, the ATR is descending. You're not getting any crazy swings going down. All down if it is down, not a lot of huge wicks or anything. Now you're below both moving averages on the VIX, but those don't really matter too much. Some traders use them, but we primarily just look at the level. So as long as this stays below 20, we're moderately bullish to sideways until we see some more volatility in the market and some more uncertainty play into things. Sector recap. What can I say? Everything's been bullish, for the month. From the bottom, everything's up. Great. What does that tell us? It doesn't really tell us much. It tells us financials are leading, which is interesting. Also on the 1 month, they're on third. They just got that rate hike in December, which has helped their bottom lines a little bit. But you're getting some whispers about the Fed slowing or not hiking this year as fast as they would have, which will have effects on financials directly. But all in all, that could be further down the road, so we'll take a look at some of these financials coming up too. Bullish sectors, what do we got here? Materials looks all right. You have a little bit more upside before you really got to get hammered down at this 90 level. Arguably you could have some resistance here about 92, but it's above both of its 50 and 20-day moving average. Not much else trying to hold it down. So if the market's rally, we definitely see this this gap up will continue. All right, we got industrials. Same thing, same almost kind of sector type of plays. This one has a little bit more, a little bit more of a gap up, and it's cleared that downtrending lower lows trend line, if you will. So we definitely think there could be potential upside to 145. And something to think about. All right, bearish. We got consumer staples and utilities. Consumer staples coming right up on that long-term now resistance, but that was support. Hasn't broke above its 50-day moving average. Has gapped up, so we'll have to keep an eye on that if it continues or not. But we have earnings coming up this week, next week, and we think that a lot of these companies are going to be, missing their earnings or lowering forward guidance, like we kind of saw with Apple, setting the trend for that. That's kind of our view. We just gotta wait to see, when they do announce that this quarter, next quarter, how long can they put it off? We think it's more likely this quarter that most of them are going to be missing. So something to take a look at. Utilities. This is more of a sideways play. It's a bearish play, but it's only if the market goes up. So if the market goes down, we're probably going to see utilities spike back up again, and it's going to invalidate the trade. So this really works as a bullish trade because if you're taking a short position or buying puts on the utilities, because you're just basically trying to hedge out, the market's moves, and utilities pretty much move inversely to what the markets do, for relative purposes. So something else to think about, but probably not something that we're going to be playing to. A little bit update on crypto. Kind of an uneventful week. You're starting to see these BART patterns come back again. This is relatively low volume. Nothing really to look at. It's just someone trying to make a quick buck here and there, manipulating these markets. They're still the market cap's too low for real price discovery to happen, and can still be suppressed, which is why we only allocate a little bit to crypto so far. But it's definitely on our radar as money starts getting poured in. A lot of the bad actors start getting drowned out by the real participants and people who have real money. So we'll keep an eye on it. Check out our next video. We got stock alerts and levels that we're watching. This was our weekly market outlook as always. It's good to be back, and we hope the rest of 2019 goes as smooth as this week did. Happy trading for everyone, and we'll talk to you in the next video.